in terms of your own politics, your federal government doesn't believe that there's a business case for Canadian oil and gas. The market believes differently.
Yeah.
And irrespective of my common sense, I've decided that Canadian oil and gas is just too cheap. That may be a mistake. It may be that Mr. Carney, despite his obvious financial acumen, also can't see the business case for Canadian oil and gas. I saw the business case for American oil and gas, and I would suggest to you on a discounted net present value basis that the Canadian companies are substantially cheaper than their U.S. counterparts, who are also cheap.
Cheap, yeah.
So I've been a consistent buyer and consistent advocate of the Canadian oil and gas industry. And it may be that I will be, as a consequence of that, a victim of Mr. Carney like I was a victim of Mr. Trudeau.
What an absolutely fabulous time to get a chance to talk to Rick Rule. And Rick, let me start off by saying how much I appreciate you finding time. I know there's of course there's no shortage of things to talk about, but there's so many compelling things that people want to know. They want to know what your opinion is about this, that. And so I'm going to start with something super positive. What about gold? Because you've been a big advocate. You've been recommending it to everybody who follows you. So tell me your perspective at this point.
You know, it's an interesting topic, obviously one in the news today. People, around the time of our last interview, 8 or 9 months ago, were saying to me, Rick, when is the gold price finally going to move? You know? And Michael, I would scratch my old chin sagely and say, I think gold's going to move in the year 2000. It was $253 an ounce then.
Yeah.
It moved up to $3,000. What's that? A tenfold move, more than a tenfold move. And people are saying, when is gold going to move?
Yeah.
It's moved 8.75%, 9% compounded for 25 years. And people say, when is the gold price going to move? You sort of scratch your head.
Yeah, that's a great point, by the way. Yeah.
It has done what we ask it to do. It's maintained its purchasing power. One must ask before the recent move in gold whether the gold price actually increased or whether the value of the currency that it's denominated in decreased.
Yeah.
That's another issue.
But a key issue, I think, because yes. I think that was I would have considered that a guarantee. I look historically and I can't find exception to that. So, when governments get a hold of paper currencies, their purchasing power goes down. So I thought that was, many things will drive the price. I'm just saying, I thought that was the guaranteed one.
That's the crux of the gold decision today. I think people who are traders need to look at the current strength in gold and need to consider whether they're going to take profits. If you were in gold because you thought that there was going to be a move in the gold price, well, there's been a move in the gold price. So do you take money off the table or not? It depends on who you are. For me, I own gold for a reason. I trade other things. I store wealth in gold. Mm-hmm. And I think it's useful in the vein that you talked about to discuss what would cause me to sell my gold. That's pretty simple. I own gold because I'm concerned about the deterioration of the purchasing power of my savings denominated in US dollars. By the way, more concerned about that portion of my savings denominated in Canadian dollars. Yeah. But that's a different topic. In terms of US dollars, the thing that would cause me to sell my gold would be my concerns to go away. Particularly, I would need to see a balanced federal budget. Last year, my country took in, at the federal government level, $5 trillion, and they spent $7 trillion, meaning they were $2 trillion upside down, with no end in sight. The second thing that I would need to see, Michael, is a fiscal resolution to the off-balance sheet liabilities of the U.S. government. Many Americans don't realize that the net present value of unfunded government promises, Medicare, Medicaid, Social Security, federal pensions, military pensions, that number, according to the Congressional Budget Office, not Rick Rule, exceeds $100 trillion. To put that in perspective, that's 20 times gross federal revenues before they spend a dime. That's a little ugly. So I would need to see some resolution of that. And the third thing I'd need to see is a resolution of what I see as negative real interest rates. And let me explain that. Our government would have you believe that the correct measure of the debasement of the currency is something they call the CPI. I call it the CP lie.
Mhm.
If you rely on their estimate, the purchasing power of the US dollar is deteriorating about 2.6% compounded annually. Doesn't seem too stark. But I think that any of your American listeners who compiled a list of goods and services that they actually buy and looked at the price escalation in that basket of goods and services in the period, say, 2020 to 2025, gasoline, other energy, healthcare, health insurance, mortgage interest, rents, pick something, food, they would find, I think, that the purchasing power of their savings is deteriorating at a rate more like 7.5 or 8% than 2.6.
Yeah.
And that's problematic if you are saving US dollars in, as an example, the world's benchmark savings instrument, which is the US 10-year Treasury. The government is paying you 4.5% in a currency where the value is deteriorating 7.5%, which means that you're becoming 3% less wealthy every year for 10 years.
Yeah.
So, when would I sell my gold? When the federal budget is balanced, when there's a fiscal resolution to $100 trillion in off-balance sheet liabilities, net present value, by the way, not nominal value, and when I get paid a real interest rate on my savings. I'm tempted to say the 12th of never.
Mhm.
Uh,
Well,
but
I would certainly say that. And let me just put the Canadian context. We have a federal election, as you well know, going on right now. The sovereign debt issue hasn't been mentioned.
right,
The declining purchasing power of the dollar has not been mentioned. We have right now, the polls are saying a liberal government will be formed. Well, I try and add up those promises, and it's a guarantee of more deficit, more debt spending, and higher taxes. Well, I'm with you. Like, I see no reason to think that the security of the currency is going to get better, the purchasing power protected. There's nothing that would suggest that'll happen to me, for me. So, and I love your distinction, though. There's a store of wealth, and then there's another portion that maybe you're trading. You think that
right.
stock got too far, or the metal itself is just going to take a little rest, but you're keeping a core position because of the very reasons you've stated.
And I think it's important for people to decide uh, what portion of their portfolio
Mm-hmm.
their gold fits in. For me, very clearly, it's the insurance and savings portion. I also maintain sufficient fiat currency liquidity so that I can take advantage of
Yeah.
circumstances, illiquidity, rather than being taken advantage of. But my core store of value is in gold, and when I think about the price of goods measured against my gold, all of a sudden stuff feels cheap. When I do the same calculation in US dollars or Canadian dollars or Australian dollars, goods seem expensive. There would seem to be a lesson
Yeah.
in that.
Yeah. No, and again, it's not a separate topic, but it's is what the Canadian dollar is going to do.
Right.
And if we continue to pursue, people should. My big thing is make your policy choice, but understand there's consequences. I'm not trying to say to anybody, just as you know in the markets, I don't care if you buy or don't buy. I don't get an emotional attachment to what others are doing. And it's the same. Look, you have a right to choose any priorities you want. I'm just saying know the consequences of those priorities. And in this case, we will have higher deficit and higher taxes if it goes the way the polls are suggesting. And that's people's right. But I'll tell you, if you don't prepare for it, just like if you described, if you haven't been preparing for that, you're getting killed. And that's what we're seeing also in the stats. People who did not have big time assets that were rewarded during the pandemic with government and central bank policy, well, you're in real trouble.
Michael, I'm not as you know, a Canadian citizen or a Canadian voter. I am sadly a Canadian taxpayer. For that reason, I pay some attention to Canadian politics. It's interesting to me that the incumbent party, first of all, seems to be running against Trump, who, as far as I understand it, isn't running in Canada.
Yes.
Correct me if I'm wrong. And they're also campaigning for change, which seems to me to be particularly ironic. The
Oh,
incumbent party has been there for what, 10 years?
yeah. Yeah.
I'm all for change. I just wonder who might manage the change. The
Yeah.
other thing that I think about south of the border, looking north, is that if you look at the voting history in Canada, with a few exceptions, what I guess I would describe as the consolidated left, the Liberals, the NDP, the Greens, the Bloc Québécois,
Mm-hmm.
consistently get between 60 and 62% of the popular vote. And the set of circumstances which causes that to change appears to happen fairly infrequently after very long mismanagement. It could be, I suspect, that Mr. Trudeau became personally unpopular.
Yes, that's
I
what it was.
noticed Mr. Polyev ran against Mr. Trudeau for 3 years rather than 4 something. And the consequence of that is that and correct me, feel free to correct me if I'm wrong, that the Liberals decided to fashion change from within, which is to say, uh, allowing Mr. Trudeau to pursue other employment opportunities while drafting a very unlikely proponent of change, given the strings that he allegedly pulled behind the scenes among the Liberals. It's an odd circumstance.
Yeah, it absolutely is. Let's come to the U.S., though, across the border. Because of the tariff situation, as you well know, I think the most ill-advised statement, at least from a Canadian point of view, is President Trump saying it'll be the 51st state. That took so much of the oxygen out of the room. You know, it was emotion-based. I think then we had politicians trying to take advantage of that, you know, and sort of distract from the tariff issue, which is incredibly significant, but it did distract from it. And I think, again, we're not well served by that in Canada, that it solicited that emotional response.
You know, if I were Mr. Carney, I would build a shrine to Donald Trump. I think Trump is the best thing that ever happened to Donald Carney. From my own point of view as an American, it's important to remember that tariffs are taxes. And Americans are not undertaxed. The idea that, as an example, an American consumer of Canadian aluminum, the idea that Canada is going to pay the tax, the tariff, is silly.
Yeah.
I mean, it's truly silly. Tariffs are taxes, and taxes are bad. There's a different problem if you're an American, I think. One of the great statesmen of the last 100 years was the great Turkish president, Kemal Ataturk.
Yes.
He said, many friends, no enemies. He lives in a very difficult jurisdiction. He had Iran to the south of him. He had Russia to the north of him. You know, the Turks, until fairly recently, negotiated that fairly well. And I would prefer that my president and my Congress also pursued a strategy of many friends and few enemies. And the idea that they're going to punish the enemies by increasing my taxes, well, let's say it seems to be ironic at best. Now, this will doubtless raise the ire of some of your listeners who live in the United States. Unlike many Americans, I read Mr. Trump's book, The Art of the Deal. And Mr. Trump seems to believe that there shouldn't be 2 winners to a transaction. That there's logically only 1 winner to a transaction.
Yeah.
And I fundamentally disagree with that. I want to do transactions with people I can do repeat transactions with. I want to save myself additional due diligence. And I believe that transactions are supposed to be win-win, not win-lose. And I believe further that if you're going to pick a fight, I've been in a few fights in my life, that you not pick 200 fights simultaneously. You pick 2 or 3 fights and you win them and then you move on. So there's an awful lot about U.S. policy, both foreign and domestic, that are problematic for me. But further to that theme, a lot has been made in my country about something called the Department of Government Efficiency.
Yes.
It's interesting that the political forces that promise us budget cuts just passed a continuing resolution to raise the debt ceiling and proposed in a budget the 4th largest quarterly deficit in history. You know that I have an upcoming investment conference, July 7th, and my keynote political speaker will be a guy named David Stockman.
Yes.
He presided over the last Department of Government Efficiency. It was called the Office of Management and Budget in the first Reagan administration. Reagan had a real political mandate to reduce the size of government, not a small plurality, which Trump had, but a real plurality. And David Stockman's book, The Triumph of Politics, describes the derailment of the Reagan Revolution within 6 months of his inauguration by political forces that were both Republican and Democrat. It's important to
Mhm.
understand the rhetoric in the United States around the political reality of the United States. And sadly, what happens when you look at that is not particularly encouraging for the United States.
I would agree completely with that. I mean, what I look at the modeling is that, we're in a path that doesn't lead very many good places. And you watch how, not just polarized, but this is the revenge of the establishment, in my view. I'm not amazed, but boy, we should note at least how powerful their blowback is to some
Right,
ridiculous spending cuts. I
right.
mean, they've managed to turn the attention to somewhere else within that. And it's just been astounding. But I think the question with the tariffs and with that people have is, has it changed your investment outlook? Are you cautious? Like I was bullish before the tariff stuff, and I'm not talking the tariffs on April 2nd. I'm talking
Right.
the tariffs going back because Mr. Trump was very consistent in saying he's doing this.
Well, I'm probably making a mistake as a consequence.
Hmm.
In terms of your own politics, your federal government doesn't believe that there's a business case for Canadian oil and gas. The market believes differently.
Yeah.
And uh, irrespective of my common sense, I've decided that Canadian oil and gas is just too cheap. That may be a mistake. It may be that Mr. Carney, despite his obvious financial acumen, also can't see the business case for Canadian oil and gas. I saw the business case for American oil and gas, and I would suggest to you on a discounted net present value basis that the Canadian companies are substantially cheaper than their U.S. counterparts, who are also cheap.
Cheap. Yeah.
So I've been a consistent buyer and consistent advocate of the Canadian oil and gas industry. And it may be that I will be, as a consequence of that, a victim of Mr. Carney like I was a victim of Mr. Trudeau.
Well, I think it's so also people have to check. I agree with your assessment. You look at the incredible advantages we have. And I do think the public has shifted, at least to some degree. I didn't buy it all when the Trump tariffs came on. All of a sudden, we had some of the same people who were very disparaging of the oil and gas industry sort of say it's our best weapon in fighting back against the Trump tariffs. I'm not sure to what degree I thought that would stick. But I do think it has somewhat, like, for example, the anti-pipeline view. I think, the majority of Canadians think we have to get a pipeline going, through Eastern Canada. I mean, what is it? We import something like 179 million barrels a year from the U.S.,
Right.
and so I think it is changing. And I like the discount. They're efficient. They've had to be efficient, in Canada. They're not spending a ton on exploration. So the cash flow situation still looks good, even at these kind of numbers. I think it depends on the time frame. I think you will be rewarded, maybe not next Tuesday, but I think the foundation is there.
That's my own belief. The inventory of undrilled grade A locations in Canada relative to the size of Canadian production seems to be substantially greater.
Hmm.
One of the great things that the United States has done is increased markedly production from the most overdrilled place on the face of the earth. Uh, One consequence of that is that by some estimates, only 15% of the original undrilled A quality locations in the Permian remain to be drilled, whereas the corresponding number in the Cardium or some of the Canadian horizons is more like 60,
Hmm.
which I think says an awful lot, assuming that some of the political challenges around Canadian production go away. I also think from a strategic point of view that had your budget balanced itself, or had Mr. Trudeau
Sorry.
seen the business case for Canadian oil and gas, that Canada would be in a much better position to have these discussions with Mr. Trump. You do a better job if you have multiple outlets for your product as opposed to just one. And you also do better if you're arguing from a position of solvency. I would say the same thing to our president. To the extent that we weren't running such extravagant deficits, we might be able to threaten in the same way that Reagan did. Uh, potential political adversaries will spend you into the ground. When Reagan made that threat, aggregate government debt was about 33% of GDP. When Trump makes the threat, aggregate government debt before off-balance sheet liabilities is 120% of GDP, which is 4 times as high. Reagan's threat was credible. Mr. Trump's threat is much less credible.
But your point's so well taken, and I'm disappointed because I have children, I have grandchildren. That's what concerns me. I can afford the consequences of poor policy, but they can't. It's unfair to them, in my opinion. Now, I want to acknowledge there are people who disagree with that. Clearly, it's not a priority for them. I personally don't know how a parent can sit by and have that view, but your point's well taken. We entered this problem with the tariffs in a much weaker position than we needed to be, whether we're talking, financially, structurally with the sovereign debt, or with just our GDP growth and having alternatives. And I don't see any lessons learned in that. We have a prime minister and a prime minister who hopes to be reelected, absolutely all over the map when it comes to pipelines. I'm going to talk more about that later, but all over the map when it comes to pipeline. Yeah, we'll do them. No, we won't. I'll do them, but I'll give Quebec the veto over it in the First Nations. Well, it's not happening then. I mean, I hope people pick up on that, though.
So, of course, the answer, if you're Canadian or if you're American, is to understand that the solution for the next generation is not the Commonwealth. It's you and them. You have to invest in your kids' attitudes and your kids' financial education, and you have to save, and you have to invest prudently. Invest, by the way, before you speculate.
Yeah.
I'm not saying don't speculate, by the way. I'm saying know the difference between the two and do the former, invest, and speculate if you can afford to do that. Because the way that you're going to be able to ensure your family's solvency is not by relying on Canada Pension Plan or if you're in the U.S. Social Security. Those are actuarially very unsound vehicles. You're going to have to do this yourself. And people need to recognize when they look at the Canadian budget or the American budget that your retirement and your family's financial future is up to you. Up to you. This isn't meant to scare anybody. We're going to get through this, Mike. We're going to do it. But there's going to be a reckoning. People like you and I, who are old enough to remember the decade of the 70s, understand something about what's in front of us. Many people don't remember this, but in the period 1970 to 1980, according to the Office of Management and Budget, the purchasing power of the US dollar, not relative to the Canadian dollar or the Australian dollar, just internally, fell by 75%, which meant that $1,000 worth of goods and services in 1980 was worth $250 in 1970 terms. What that meant is that if you saved with a constant dollar budget, your standard of living declined by 75%. Not coincidentally, Mike, in that same period where the purchasing power of the US dollar fell by 75%, the gold quote increased 30-fold. Some of that, I will give you, had to do with the deregulation of the gold price, probably the move from 35 to 100. Some of it, at the end of the decade, probably had to do with the popularity of gold, the fact that it probably overshot its value. But let's assume, just for fun, that the correspondence between the decline in the purchasing power of the US dollar and the increase in the nominal price of gold were equivalent. What that meant was that a 75% decline in the purchasing power of the US dollar should generate a 4-fold increase in the price of gold. My own supposition, when I look at the on and off balance sheet liabilities of the US government and the US economy's ability to generate surplus revenue, will be that the only way out of our fiscal challenges will be to again reduce the purchasing power of the US dollar. And I suspect over 10 years, a corresponding increase in the price of gold.
This is why, by the way, I'm going to a little plug here for what you're doing, because I think education in this way. I mean, people who've been to our World Outlook conference several times have heard me say the only bright thing I said is you got to disabuse yourself of the fact that government is going to bail you out.
Right.
if you don't. I mean, I couldn't be more aligned with you. But you're also doing a conference coming up on July 7th at Boca Raton, Florida. Can you just give me a little hint what you're doing down there?
Well, thank you for the opportunity. I should say to begin with, this is the 30th anniversary of this conference. We held it in Vancouver for a very long time until COVID,
Mm-hmm.
uh, and the ArriveCAN app got in the way. You know, Mike, with my constituency, there would have been border issues. So anyway, we moved the conference to Boca Raton. Uh, a few things I'd like to say. First of all, it's gone on for 30 years, which means we've done a few things right. We have a
Yeah.
wonderful returning group of attendees. What I think sets our conference apart from most conferences, and by the way, you can attend live in Boca Raton or more conveniently for most people, via live stream online.
Yeah.
You don't have to be in Boca. Either way, we give attendees over 50 hours of programming, uh, more than they can absorb in 4 days.
Yes.
But we make the recordings of the conference available for a whole year, and you need them. Why? Well, the big picture stuff, the macro stuff that we do, we always try to get speakers who speak to the issues in a biblical sense from the belly of the beast.
Mm-hmm.
The guy who's going to talk about U.S. debt and deficits is David Stockman from the belly of the beast. He ran the Office of Management and Budget. He just wrote a book called How to Cut $2 trillion from the U.S. Budget. Sobering reading, by the way. We have Daniela DiMartino Booth talking about the U.S. Fed. She's not a journalist. She was a researcher at the Dallas Fed.
No.
We have Nomi Prinz talking about the structure of Wall Street. Again, she's not a journalist. She was a partner at Goldman Sachs.
Yeah.
We talk about financial products and the excessive leverage in U.S. private and public sector. And the guy who does that for us is Jim Rickards, who was
Yes.
federal counsel for long-term capital management, whose failure almost brought down Wall
Mm-hmm.
Street. So what we try to do with the macro part of our conference is have players, not commentators.
Yeah.
Go ahead.
I was just going to say, where can people get more info? Like, I know it's up online, but
Rulesymposium.com is probably the best place to do that. Failing that, ruleinvestmentmedia.com. Both places will do it. As I say, you could attend live or via live stream. And importantly, at this conference, unlike any other conference I know, whether you attend live or via live stream, if you don't think you got your money's worth, I'll give you your money back.
Yeah.
It's a full money back guarantee. No questions asked. We've been doing it for 30 years. By the way, over 30 years, the product has been good enough that we've had to refund about 0.1% of the tuition that we've charged. But the guarantee is there.
And we'll also put that up just so everybody knows on our social media. So you didn't have to memorize what Rick was saying. I'll make sure it's there sitting for you. But just before you go, I got to say this last thing you guys do, and you've been doing it for years. You can say, and our audience can take advantage of this. It's free. Everybody can do it. You can send Rick your resource stock portfolio, and he and his team will review it for you. I mean, this is fantastic. Again, just go to ruleinvestmentmedia.com, and on Twitter, it's at @RealRickRubin. But anyways, you can send in your portfolio, and Rick and his team will go over it and say, that's a stinker, that's a good one, that's a this, that's a that. I just think that's a fabulous service, and it's absolutely free.
That's right. No obligation. Send me your portfolio. We'll rank it 1 to 10, 1 being best, 10 being worst.
Mm-hmm.
We'll comment on individual issues if we think our comments might have utility. And there's no charge, no obligation. It's absolutely free.
Great stuff. We'll put that up too on our social media. Rick, thank you for finding time. I know obviously you've been very busy. I'm glad you made time for us on Money Talks.
Well, thanks for the opportunity. I've enjoyed talking to your audience through you for some time. Thank you for having me back.
Appreciate it.